Welcome to our investorresidences.com 10 property Airbnb fund webinar. We're going to talk about today how we are putting together a portfolio of short-term rental investments, often referred to as Airbnb properties. My name is Richard C. Wilson. I started an investor club 15 years ago in 2007. Between 2007 and now, which is a 15-year period, I've built up a 22-person team. I've authored 13 books. We've hosted 185 live events, and we own some of the largest media platforms in the investment industry. These platforms include the Family Office Club at familyoffices.com. It includes billionaires.com, commercialrealestate.com, capitalraising.com, etc. And today we're going to share with you what we've developed after meeting with over 3,000 investors face-to-face, hearing their complaints at 185 live events of what everyone's asking for. We don't see anybody providing, and we have some really exciting opportunities right in front of us. So I'm excited to jump into it. I am just a little bit on me. I'm a third generation Eagle Scout. I'm a father of 3, been married for 12 years. I'm based in Scottsdale. Half my team is based here in Arizona and half of them in Florida. And I'm going to go ahead and share my screen now. I don't have a long PowerPoint to go through. It's just going to be about a 20-minute presentation to get through the information, and then we'll do some Q&A. So happy to open that up here shortly. All right, you should be able to see my screen in just 2 or 3 seconds here. Maybe you can give me a thumbs up, Jen, when it shows up there for everybody. Great, thanks, Richard. Good to see you here. Okay, so to begin with, investorresidences.com. What is it and what are we trying to do? Our goal is to give you a 2x return on your investment in a diversified portfolio of 10 Airbnb properties. And as a bonus, you also get a lifetime vacation benefit, which means a vacation credit you can use every year for as long as we own the remaining properties. You can see some of the example locations down below here on the screen. So you can see some of the areas that we're looking into. And in the later part of the presentation, we're going to talk to you about the first 3 assets coming into the portfolio. We have 1 already closed and 2 that we're closing on right now. And one more thing is that we do host 15 live events a year. And just next Thursday, we're hosting a 1,000-person investor club event. It's just an example of what our core business model is and where the insights came from to put together a unique vehicle like this. So if somebody asked, what did you do last week and for Labor Day, you probably didn't tell them about how it was fun visiting your mobile home park investment and helping get this couch off the street, or cleaning up the pool at your multifamily deal that you did recently. Not all of your investments are too exciting to go and visit. And a lot of these areas are pretty crowded. You know, there's a ton of institutional money buying apartment buildings. So the cap rates get compressed and you have to pay more and more for that asset. Well, short-term rentals are not compressed by heavy institutional investment, and they're a little bit more fun to visit, and they can make you the same returns and very good returns with low to moderate risk. And that's partially why we're here today. A little bit on our background. I started the company in 2007. We hit $1 million in revenue, our 3rd year in business. I wrote the first book on single family offices, which are ultra wealthy families and their wealth management organizations. I've written the only book on how to start a family office, the only book for centimillionaires called Centimillionaire Strategies. And now we have over 1,000 members in our family office club and over 3,000 investors registered with us. This is a little bit on our team. As you know, the strength of every organization is their team. We're proud of our 22-person team, and I'd like to introduce one of our industry experts on short-term rentals, Jen Myers, who's here on the call with us today. So Jen, feel free to introduce yourself.
Hello, everyone. Thank you, Richard. Just wanted to pop on here and give a little bit of background about me. So I'm coming in to investorresidences.com as the operations manager, and my background is in the short-term vacation rental industry, where I started working with vacation rentals on the Big Island of Hawaii in 2012. And this is where I acquired my real estate license and piqued my passion for this industry. So this is really exciting for me to be involved in this fund and this project. I'm going to be coming in, as I said, the operations manager, where I will be advocating and leveraging the best property management practices working with investor reporting and property use, and assisting with property acquisitions in the fund. So I'm really excited to have everybody here with us, and I'm looking forward to launching this and working more closely with everyone. Back to you, Richard.
Great. Thank you, Jen. So Jen actually approached us about 10 months ago, and we weren't ready to hire somebody full-time who was a short-term rental expert at that point. We're actually hiring a different position. But when we saw the depth of her expertise and got to know her and saw how experienced she was, we said, okay, we're just going to bring you on early, Jen. You can help us with our planning, our strategies. And so she's a real strong member of the team. 33% of the 22 people you see here in front of you are from the hospitality industry. We love hiring people away from Marriott. We also have 3 real estate licensed brokers and agents on the team, including Jen, and that helps us navigate the markets as well. So what we're doing is building a portfolio of 10 properties. The reason why is that if you buy all 10 properties in Lake Tahoe and there's a fire in Lake Tahoe, that's bad for investors, right? When you have 10 properties in 10 locations, it builds in diversification, makes it more seasonally balanced, and it also adds some more fun to the portfolio, honestly, because maybe you don't want to go to Lake Tahoe 4 times a year. Maybe you just want to go once or twice, or you don't even like 1 or 2 of the 10 locations that we acquire. So here's how it works. We double the value of your capital while helping you create new memories at the same time. And we're basically the real estate division of the Family Office Club. It's the niche that we've chosen to focus on. And for every $25,000 that you invest in the deal, you get to stay at the property 1 night. And you're getting quarterly cash flows. In phase 1, you get quarterly cash flows until you double your money. And importantly, we don't make $1 until you've doubled your money. Every other real estate deal that we have seen charges you acquisition fees, disposition fees, financing fees, a capital raiser fee, an annual asset management fee, and then after, say, a 6 or 7% hurdle return per year, they're taking 20 to 50% of all the profits. And over 15 years, we've just heard investors say they want more alignment, they want more transparency, they should be winning first and getting their money off the table first before the asset manager charges them 9 types of fees or even 2 types of fees. Because so far, all you've done is tie up their money. You haven't returned anything to the investor yet. So in our model, the investor gets all the quarterly cash flows, all the distributions until you've doubled your money, not just got your money back off the table. So that's really important to emphasize. That's phase 1. And we buy these 10 properties, you get quarterly cash flows, and in between a 6 and 9 year period, we refinance the portfolio, sell off 2 to 4 of the 10 assets to get you a 2x return on your money. And then you're left with a vacation credit that you can use at any of our remaining properties in this fund or any future funds we do where we're 2xing out, doubling out investors' capital. Once those investors have been doubled out in those other funds, you can also use your vacation credits at those properties as well. So since 2007, we've done well over $250 million worth of transactions as an investor club. We've learned a ton by doing that. Just this year, we've closed on over $55 million worth of deals with our investors that we work with and helping source and structure and negotiate opportunities. So by going to all these conferences, I've gone to every one of our 185 live events. I'm sure at some point I'll get sick or miss a flight or something, but I've been to all of them. Here are 3 questions that come up all of the time. And I'm sure at least half of the investors here on the webinar have asked these 3 questions. How can I source more simple, passive cash flow investments to put my capital to work in that doesn't take your time because you're probably running a team, running a company, and you're very busy? How can I earn a fair or even a good or great return while sleeping at night and not being worried about it? We're not doing ground up construction on raw land in the middle of nowhere. This isn't a venture capital or angel investment or seed capital deal. This is not an operating business deal where if something happens to me, the whole company goes under. These are cash flowing real estate assets that can be sold off as needed. And the third question, how can I put my capital to work so it's earning income and growing in ways that's unique from my stock portfolio or the business you operate day to day, or even other real estate investments? So you can see a picture of me at our annual event last year with Kevin Harrington from Shark Tank, who spoke at the event and speaking again this year, and Jeff Hoffman, who's he's the inventor of the airport check-in kiosk. He's also one of the first investors in Booking.com as well. And so we're talking about these types of questions at our annual event, and these questions come up all of the time, and that's how we designed this structure where we don't make a dollar until you've doubled your money in the deal, and you can sleep at night because this is conservative assets in 10 markets that are all insured, cash flowing, and we're usually online within 6 to 8 weeks because we have to furnish the home after we buy it or paint it or add a hot tub, etc. And the property we're closing on right now, we're online immediately. We'll actually be online before we close on the property. We're taking bookings in and booking that revenue that will occur starting the very day that we close. There won't even be one day of no revenue on the property. So why are we excited about short-term rentals? This is not an area that just got created yesterday. Airbnb in their annual report said that they booked over 100 million nights and experiences last year for the first time. So if you look at where institutional money is pouring, which means valuations go way up on those types of real estate assets, 25% of all apartment buildings are owned by institutions, and they're still buying more, but there's a lot of institutions fighting to own those. With self-storage, I believe it's around 15%. With single family residential, which just means private homes, institutions only own 2.4% of all single family residential homes. And if you look at short-term rentals, Airbnb properties, that's a small percentage of the single family residence industry. So our estimates is that somewhere around 0.7 to 0.5% of short-term rentals are owned by big institutions. And what happens is that after apartment buildings get really competitive with capital, they look for somewhere else to put their money. And then they start buying more single family residential, buying more self-storage. Eventually they go to more and more inefficient niches that get organized by mid-sized private equity groups, and then they become more efficient for institutions to invest in. So eventually short-term rentals might take 5, 7, 10, 12 years, will be owned 2.4% by institutions or 5% by institutions, but we're around a decade or at least 7 years away from that, I believe, but the space isn't going away. Airbnb has millions and millions of units on the market, and Marriott has 1.2 million. And Marriott's been around for 4 decades longer. So if you take all of the hotel rooms combined from all the big hotel chains, it doesn't equal a third of what Airbnb has on the market. And the industry is growing quite quickly. So here's a quote from Roofstock. I think it's inevitable that institutions will enter the short-term rental market. I see incredible parallels to the single-family rental space and the long-term rental space a decade or so ago. Here's another quote from AirDNA. The business model has been proven, and now the opportunity is to do this at scale. Here's another quote from eXp Realty, one of the largest real estate brokerage firms. Experts say the transition for institutions is inevitable and that it may ultimately bring a few perks like lower pricing and more inventory. Importantly, you'll see the houses that we buy are not random houses downtown or in suburbia you just throw up on an Airbnb and hope they do well. We're purchasing themed properties that are very hard to compete with in the market. And I'm going to show you some really clear examples of how we do that. The number one question we often get is we tell them the model and they hear that they can double their money and get a good moderate return with low risk and high value memories and legacy creation experiences. And they say, oh, it's like a timeshare. And when I take that a couple steps back, one, it's not like a timeshare in many different ways. I'm not going to read this slide to you and bore you with that. We can give you access to the slides if you really want to know exactly why it's different than a timeshare. But the thing is, it's not just different than a timeshare, because a timeshare is never trying to double your money or really even make you money. You're really just prepaying your hotel fees for a certain number of years. It's really different, and we think better than other real estate investment offerings. We've helped structure and negotiate so many dozens and dozens of deals that this structure is done to be ideal and optimized for investors, so that this is not just superior to a timeshare, it's superior in structure to every other real estate deal that you've been offered. We're not trying to shoot the lights out. This isn't ground up construction in some inner city infill spot, and we're trying to get you a 10x return on your money, but it's not high risk either. And it's going to be a good 2x return over that 6 to 9 year period. And you get to use the properties one night per year for every $25,000 you invest. So it's very much not like a timeshare. And how the investment terms and fees work. We have utilities to pay. We have taxes to local counties or transient short-term rental taxes to pay, cleaning fees and property manager expenses. We don't take any asset management fees up front, annually, or on the back end until you've doubled your money. And then once you've doubled your money, you go into the vacation use credit phase where you still get to use the properties that we still own in the portfolio. We're not going to go through in great detail a bunch of these case studies. We have them written out here in case you want to go through them with our team, or look through the subscription documents, or look through we ordered $5,000 worth of investigative background check reports on myself and our 2 advisory board members. So we have those on file in the data room. We have an investment memo that's attorney reviewed. We have the subscription agreements, the PPM, pitch deck, 1-pager, 5 explainer videos, everything you'd want to know or see or look at the fine print on, we have very clearly laid out. But if you invest $100,000 and you never want to stay at the properties, you get busy, you like to stay at Marriott's or other places instead, that's totally fine. You'll get double your money back. Even if you never stay at the properties, then you put in the $100,000, you'll get $200,000 back plus your vacation credits. If you invest $100,000, but you do stay at the properties your 4 nights a year, then you're basically choosing to have part of your 2x return be staying at the property. And then that way it's fair to other investors who don't stay at the property. So you might get a 1.85x return plus in cash, plus the value of being able to stay at the property. So that's how we've balanced it out. So it's fair to everybody in the fund. And when we start out, let's say we have 50 investors. Well, once 5 of them have doubled their money, all of the profits flow to the 45 remaining investors. And once 20 different investors get 2x'd out of the deal and have doubled their money, then those remaining 30 investors are getting all the profits. So the doubling of everyone's money goes faster and faster. And eventually there'll be 1 investor left who's getting all of the profit flows, and it'll double their money out very quickly. I personally have $550,000 invested in investor residences of my cash, not my time or efforts, but actual cash invested. And we're actually selling off 2 properties outside of this fund right now to get me to 7 figures invested of my own cash, right alongside you as an LP investor inside the fund, just so you know that we have skin in the game. Not to mention the ultimate skin in the game, that we get paid absolutely nothing if we don't double your money, which is the biggest skin in the game I think you can do is structure a deal to be more aligned like that. So this is where it gets a little bit more exciting and it becomes real. Everything up to this point was, this is who we are. This is our great team. We promise we're great. We've learned a lot over 15 years, but this is the real proof of us getting and negotiating good deals. If you all remember 1 year ago, it was the hottest real estate market almost in the history of the United States. Everything was going straight up, multiple cash offers on every property. Multifamily properties were getting 30, 40, 50 offers on one property. Houses were getting 3 cash offers the same day they went on the market. This was a property that got 3 cash offers the day it went on the market. We were not one of them. The person who put the cash offer on this house, that put cash offers on 2 other houses, and they got them accepted on 2 different houses, and took one of them on the other house and broke the sale on this one and walked away from it. So we got a hold of the property by finding the seller who had just gone through a broken sale. They were frustrated with wasting a month doing that. They needed to sell it because they were moving from France to Texas, I believe it was. And so one of our team members is a real estate broker, and she's a really tough negotiator. And so when they had this property first listed for 1.3 million and change, which I think was the fair value at that time, they, after the broken sale, lowered it to 1.25 million. We came in and offered all cash, closing in 17 days, high earnest money. So she knew that we were going to close. And we tried to get it for $1 million flat, but after 23 negotiation exchanges back and forth, we counted them because there was so many, we got it for 1.05 million, $200,000 below the list price, and 31.1% below the price per square foot of the last 40 homes sold in Park City. Today, just 1 year later, less than 1 year actually, it is worth $1.45 million. So a 40% gain in under a year. And the most important point of this slide is that Park City is a hot market itself geographically, but we were in a hot market price-wise as well, and we still were able to negotiate a discount based on buying all cash. So this is one of the properties that is in the portfolio. Here's a picture of the asset. If you go a quarter mile up the road, there's hiking trails. If you go 15 minutes towards Salt Lake City, you're in town. If you go 10, 12 minutes, you're at the ski slopes. You can go sledding right here by the house. We installed a hot tub on the side of the house. The house was painted purple inside. It was god ugly, so we painted it more neutral white. We put in leather couches, 70-inch TVs, It sleeps 15, 16 people, which matters a lot with Airbnb. And it's just a nice cabin feel, and both lots are vacant on either side of the property, which makes you feel very secluded, as you can see in the pictures here. It's not like we're in suburbia Park City and you've got neighbors all around you everywhere, which is really nice. So here's the inside of the property. Only difference now is we have a brown leather couch and brown leather chairs around that table down there. Otherwise, that's exactly how the property looks. We also have the antler chandelier hanging over the dining table now that wasn't in from Pottery Barn when we took those pictures. This is one of the rooms. We have 2 sets of bunk beds in the room, and that's a pull-out couch in the rec room you're seeing out to the right. And that's just an example of what part of the house looks like. This property here is the one we have under contract right now. And we're excited to share this with you. So when we first set up this webinar, we did not have this under contract. And so that was a change just this week. But this is the next purchase. It's in the Grand Canyon area. It's called Grand Canyon Junction. The Grand Canyon gets 3 million visitors a year. The low end of the season is 150,000 a month of visitors. The high end is 500,000 a month. This is a 2-acre property, and there's 2 properties on the one tax lot. So you can see the one, this red building here, which I'll show you a better picture of in a second. There's a second building right behind it, and it sits on 2 acres. So there's room if we wanted to bring in a ADU and have a tiny home cabin or a Airstream with a deck built out next to it. There is room to add another unit. And also importantly, the acreage is for sale just to the right of the property. And if we bought that acreage, we could put down 3 cabins, and we have a pre-manufactured cabin producer that's invested with us twice before. He's the owner of the company. So we're on great terms with them, and I know we could bring in and put in some extra units. So value add is important on deals like this. We're buying it for the price of the real estate, but we could sell it one day based on a 6 or 7% cap rate. That's important. That's an arbitrage. And most important is that this is a really unique themed property. There's nothing else like this on the market in a few different ways. One is that with both properties combined, we sleep 22 people. That's more than any other property, not just in the Grand Canyon area, but the greater like Williams, Flagstaff. It would compete with the top 1 or 2 properties in that whole greater area of how many people it sleeps together. And we can rent 1 unit and the other unit separately, but then we'll have a third listing for all 3. We'll have 3 listings, meaning that you could book both properties at the same time if one of them's not already booked. That's unique. And no other property on the market we see is as renovated and has this authentic trading post feel to the outside of it. So you can see, we don't care if the number of Airbnbs in the market triples. We don't think in this area that someone's going to get something that is this unique in the marketplace. So the other exciting thing about this deal, which is showing what we've learned over 15 years running our investor club, is that we were able to source this deal off market, direct to the owner, no realtor fees, no bracket back and forth through a broker, just 2 business people talking to each other to figure out a deal. And we got seller financing secured on the deal. They started at $1.5 million asking price. We got it down to $1 million plus the price of the furnishings and the decorative items in the yard, et cetera. And this deal is highly tax efficient. So we don't have a cost segregation study done yet because we close on this deal in 39 days. But our estimates, talking to our cost seg expert, is that it'd be between 70 and 80% bonus depreciation. And you'll get a K1 that first year. You're an equity holder in the assets in the portfolio. And for those that like tax efficient deals, that's very exciting. Your K1s will be for deals that are in the property or properties that are in the fund for this year. And this will be one of them. Not every deal is going to be that tax efficient. We hope it is, but we can't promise that. Some will be less tax efficient, but this one is very tax efficient. But I wanted to point out the off market, the themed nature, the seller financing terms, and buying it on real estate value and being able to sell it on cap rates one day. So those are all things that make us very excited about this property, high conviction. People take pictures outside here. We can see on the Ring camera and we can hear them talking, and we can hear people say, the current owner has shown us and told us that people walk up and they say to their daughter, you know, what did you book us in here? Look at this old looking building. Like, look at this thing. What are we going to be sleeping on the ground or a camping cot or something? And they take pictures with the wooden figurines. And then they walk inside and it doesn't look rustic. It looks like this, like a 5-star hotel. And there's games to play. There's 4 bedrooms, everything's remodeled, including the bathrooms, the kitchens, the beds are floating off the ground to support beams underneath. Everything's themed. And here on the grass wall on the left, if you could see the wall further to the left, there are leather vests and cowboy hats and fake pistols, and you can do Old West photo pictures with this, and it's kind of social media fun worthy, etc. So finding a property that looks like this, that's one hard thing, and then making the inside look like that, that's the other hard thing that will defend us against more and more assets coming onto the market. This is the picture of the kitchen, just to show you the quality of that. This is the bed. Hard to see that's floating. If you look at the very bottom, you can see the space there, but it is very well renovated and well done overall. So what are we doing here with investorresidences.com? Importantly, before we get distracted by reading that slide, I just want to point out that we work with a lot of families that are worth 5 million, 3 million, 2 million, but also a lot that are worth 10 or 15 million or hundreds of millions of dollars. And what does everyone do after they are 25, 30 years old and they have money? They're not getting excited about buying, a Ferrari and dreaming of that. They're not getting excited about buying a vacation home. They want to be good stewards of their wealth, but really novel experiences is what families of any net worth want. They want a novel experience, taking their kids to Europe or spending the summer in Asia or going and traveling and just having a fun, novel experience is what ultra wealthy investors typically are paying top dollar for, rather than a material item per se. And so that's a common trend we've seen. And so that's one of the reasons why we went about creating this portfolio. And you're getting exclusive experiences for your family. You could gift some of your vacation nights to your employee of the month. You could gift some of your vacation nights to your C-level executives at your company, or a client as a Christmas gift, and you gift them 2 nights at Park City or somewhere else. As we build out the portfolio, the beach locations are our next target. We're looking at properties in 2 different cities in Florida and looking at how to get into the Hawaiian market with all of their tough laws. And we've found one way to get in there. And so you're getting exclusive experiences, you're getting quarterly cash flows. If inflation continues, then this will help protect against inflation, because the Airbnb rates will go up, the property values go up, and it's just going to double your money faster if there is higher inflation continuing. And then besides the quarterly cash flows, our goal is to double your money, because there's no benefit to us doing all of this work until we've really doubled your money. And so we hope to do that over that 6 to 9 year period. And the faster we can do it, really the better. So the lifetime vacation benefit, just know that every $25,000 you invest, you get $600 worth of credits to stay at any of the properties after you've doubled your money. So if you wanted to stay at the properties a week a year, then for $175,000, you could do that, and you'd have $4,200 worth of credits after you've doubled your money. And while you're doubling your money, you could stay up to 7 days at the properties in the portfolio at a discounted rate, where you're not going to be sent any bill or any invoice. It just counts towards the doubling of your money if you choose to get that type of value from your investment. So this is how we could help put your capital to work. We're buying off-market deals, and we are looking at deals that are some of the best performing assets in a market and negotiating seller financed off-market deals, or coming in with reduced price negotiations and making all cash offers. This is a passive investment for you. So if something breaks, we're fixing it. We have a 22-person team. We have regional property managers we can engage and will be engaging on different assets. And we also have the ability to self-manage properties internally. We purchase based on real estate value, but we intend on selling based on a cap rate value. And conservatively, we're assuming a 7% cap rate. But everyone right now is selling at 6% cap rates. And as institutions come in, I can't guarantee this, but I do believe that in 5, 7, 10 years, these will be selling at 5.5, 5.75% cap rates, not 6 or 7. But let's just say it gets worse. So we're assuming 7%. You'll get quarterly cash flows. And then again, after that period of time, we'll refinance, sell part of the assets, get you double your money back. And meanwhile, have you not be losing sleep. These properties are in different locations in case of natural disasters. They're insured. They're low leverage. We're usually buying all cash, or 25 or 50% leverage on average across the portfolio. And if, God forbid, my whole team and I perish on a plane crash on the way to one of our conferences, someone could step in, sell off the assets, and you've gotten those cash flows up to that point. Plus, these could be liquidated pretty easily in almost all cases here. So we like to say it's low risk, moderate return and high fun and family memories. This is not venture capital. It's not cryptocurrency stuff. We're not saying we're going to 20 times your money. We want to 2x your money and not have you lose sleep while we do so, and have some fun while you do so if you'd like to. So currently we have $450,000 available out of the $900,000 of cash equity we need on this next purchase. It's expected to fill up in 10 to 12 days, just as the last one did. This deal will fill up fast. The minimum is only $25,000, but most investors put in $75,000 to $125,000, and larger family offices are putting in $250,000 or more. One way to think about it, though, is that if you put in only $25,000, you're really only investing $2,500 in 10 different houses. So if you put in, $100,000, you're putting $10,000 into the Grand Canyon house, $10,000 into the Park City house, and you're really spreading your money out in $10,000 chunks. And it's a diversified way to do so. If your wealth management firm, your family office, or your company would like to gain access to this for a vacation employee benefit, we can help explain how that works. We didn't expect that to be a motivation for investors. We've had that come up many times, that people want to invest so that they can provide a vacation perk to their employees to help retain them or reward their best salesperson or top CFO type executives. And if you personally wanted to invest, please let us know. We could send you the subscription agreement, the DocuSign. And what we like to do in this type of a situation is just have you private message or chat with either myself or Jen, and just tell us the amount you'd like us to put you down for, because we do think it's going to fill up over the next 10 or 12 days. And you need time to look at the subscription agreement, look through the DocuSign, look through our full pitch deck, our one pager, our investment memo, the investigative background checks we have on file, the 5 educational videos we have on file. We're also recording this in case someone on your team or your spouse or chief investment officer needs to review these details as well. But we would like to at least put you down for X or Y amount and kind of hold your spot for that amount in the fund and for this transaction that we're closing in October in the Grand Canyon area. So please do that now via chat with myself or Jen directly, so we can record those and write those down and kind of reserve your spot. Everything has been put together properly by attorneys that put together 90 different investment funds per year. And this was such a unique structure that they have never seen a structure like this before, where the investor gets double their money back before we earn anything. So it took us 7 months to structure everything out to be exactly how we thought it should be. There's just disclosures just about how it's been structured out. If you do want to schedule a call with someone on our team, you can scan with your phone the QR code here, and it'll pop up a scheduling tool. You can also text me directly at 305-333-1155 or email me at richard@investorresidences.com. We also would like to open it up for questions and answers at this point. If anyone has anything they're curious about or a concern or anything else, then please just let us know, and you can either raise your hand and we can call on you, or we can take questions via the chat box if you prefer to do it that way. Oh, I see a couple questions here. Are the investors registered on the deed or get on the deed or get a lien certificate? Mohammed, the investors are equity holders through the fund. If we have 50 investors, it's not practical to put 50 investors on the deed. So the LP vehicle is on the deed, but you are an equity holder directly through that. So you do get the bonus depreciation, the tax benefits from that, if that's valuable to you. Let's see if we have another question here. Oh yeah, Jeff, great point. So do you know if we can 1031 into this? Yes. So we can take 1031. You can come in as a TIC, a tenant in common investor. You're in there for 12 months and 2 weeks, just to keep it safe, for over 12 months in the same name that you exited the last property under, and then you kind of auto roll into the fund after that point. So just know that the first 12 months you're invested in that one property, and then it rolls into the fund after the 12 months and 2 weeks. But we can take 1031 funds, we can take solo 401k, self-directed IRA, retirement funds. Our attorneys tell us that if you use retirement funds, they're tax advantaged, then treat this like a cash flow investment. And you cannot come and stay at the properties because the IRS will see that as a usage and a benefit of your retirement investment. So just know in that case, it has to be not enjoyed by you and your family if you do it through a retirement account. But we can do 1031s, self-directed IRAs, solo 401ks, et cetera. Richard's asking, how did you find the Grand Canyon property off market? One is we studied all the properties that were performing the best in that market and looked at how much money they were making. And then we have some proprietary data sources, and then we have some real estate tools through our real estate brokers, and we're able to identify 5 potential assets. We engaged with 3 out of the 5. One was crazy, thought his property was worth, $3 million and he wouldn't come down. One of them, solid property, but not as renovated and didn't have a unique trading post feel. And then we narrowed it down to this one and flew up there and saw it and decided to move forward with it. How does the fund hedge against inflation? Airbnb rates would go up as inflation goes up, and real estate prices typically go up over time as well. But one thing we have to guard against that not happening is if we have acreage next door, we can add some cabins, or we could add a ADU of some type. We can also improve properties in different ways by putting down hot tubs or more of a backyard experience on those 2 acres, like a non dangerous archery set with rubber tips or something for kids, or just old West type activities for the yard there. So when you add value to the property, obviously you can increase the valuations and what you charge per night. And then also we buy based on real estate value and sell based on cap rates, which can really help. Are retirement funds limited to 25% of the fund? No, Patrick, we're not limited to 25% of the fund. Luis has a question about my phone number and email. Yes, my phone number 305-333-1155. Email is richard@investorresidences.com. Andres, do you have a max on how much qualified money you can accept in total? No. How much will you borrow when the fund is fully closed? So I'm a relatively conservative, low risk person. In 15 years, we've invested in 2 startups. Both were through best friends. One of them sold to a billionaire 18 months later. The other one did not go so well. And that's why I don't invest in startups. I like things that are cash flowing and relatively low risk. And so we're not taking high leverage. 25 to 50% max across the portfolio is really the parameters we've set out in the legal docs. So we're not looking to take high leverage. The only exception would be when we get to the 6 to 9 year period and we're looking to double your money out. If we need to get you a great return in better time, then we will take the risk of higher leverage to get you your double your money return by selling off even up to 4 of the 10 properties, plus taking on higher leverage to get you your 2x return. So, but we don't do that on behalf of the investors. Questions here. Will you share this average nightly rental fee we're aiming for? Yeah, great question. So Narav, in Park City, we rent for up to $3,000 a night for the winter time, which is the peak season. In the summer season, we rent it for as low as $300 to $400 a night. And then the prices are really in between along the way. So we're thinking it's going to be an average of $600 a night across the whole portfolio. And the Grand Canyon property is going to start in the 400s for the front property, the 300s for the back property. After 12 months, it takes about 6 to 12 months to season a Airbnb asset and get enough reviews and momentum of people flowing through it. Then you can charge more of what you really deserve to charge, which will be the $500 to $600 a night as a average charge. But on holidays, they're already booking it out for $700 to $900 a night in the Grand Canyon area. So we do expect that to trend upwards over time. Yes, 305 area code 333-1155. Jay's asking, are the returns capped at 2x? Yeah, really great question. So they're not capped at 2x because you get that vacation credit as well. So when you're in the property, just know that we don't make $1 off of you investing until you've doubled your money. That's the most important thing. Other people who are trying to get you good returns are taking fees up front. They're taking fees annually. They're taking fees on the back end, and they're taking a profit share. We don't need to do that because we have the family office club, which brings in 4 million plus a year in revenue and is a nicely profitable business. I can earn my income there. I don't need to earn my income off of charging you guys before I've added value to you. So the whole point is to add you a lot of value first. You double your money, then you're out of the deal except for the vacation credit. So you should get somewhere between a 2.1 to 2.4x return is a reasonable expectation over time. And just remember that during that period, we'll open another fund or 2 or 3 during that 6 to 9 year period. So if you're happy with how things are going and you really enjoy using it, then as you're getting your cash flows back, you could be putting back in 25K, 100K, and compounding that interest. So in our platform, you could compound your returns and put them back into the deal as you go if you wanted to. Will the recording be sent out? Yes, we'll definitely be sending out the recording to everybody who signed up for the webinar, because I know some people weren't able to make it and they told us that ahead of time. How does the investor get paid the 2x return? So great question, Scott. So we pay out quarterly cash flows. And then in that 6 to 9 year window, we look at the valuations of all the 10 properties and we say, okay, which ones of these have the valuations really spiked up, or we would like to have them exit the portfolio due to county regulations or some other aspect being a headache of owning that property. Then we will sell 1 to 4 of the properties and then refinance the remaining properties to get the investors the double their money back experience that we're really aiming to do. Could you give a range of quarterly payments for those who invest who do not use the properties for like $100,000 investment? Yeah, sure, Jeff. So essentially, we're looking to cash flow, those first 6 to 12 months, you have to season the Airbnb property and then the prices go up. And usually when we buy it, there's ways to add value, adding an ADU, buying the acreage next door, maybe adding a couple extra bedrooms in a basement, or charging more market rates and having more beds inside the unit. So at the beginning, it is most likely a 6 to 8% cash on cash return, and you divide that up by quarterly payments. But in year 2 on most of these properties, we're looking at 7, 8, 9% cash on cash, and then better in year 3 on if everything goes, as we plan it to. And then you get that injection of cash when we sell off a few assets or refinance. We have, let's see, do we have any other questions on here? Let me scroll up. Did I understand correctly that once the investor receives their 2x initial investment, their subsequent return is only the vacation credit? Yes, that's correct. After you double your money, the vacation credit is what you're left with in the deal. And again, those 3 questions that investors ask us: how do we structure a deal which has maximum alignment? You're not losing sleep at night about it. It's insured properties, 10 different markets, 10 different assets that are cash flowing. It's not ground up construction. It's not, oh, if permitting goes through, or if the bank doesn't pull our construction financing, or if as an operating business, our business model works, quote unquote. There's a lot of demand out there for these assets, but you need a team to manage them. And that's why we've built out, our 22-person team and all the real estate agents and hospitality team, et cetera. Let's see, the average price. I think we covered that through a different question. Personal nights bankable. No, we don't have them bankable, Evan. The use nights, you'll just get your money back cash on cash if you don't use the nights during your 2x phase 1 period where you're doubling your money. The vacation credits are not bankable, but they're giftable. So if you want to give it to an employee, Christmas present, for your sister for her birthday, most people that I know who are earning more than $100,000 or $200,000 a year would actually appreciate a gift of an experience more so than a new plastic device to have in their house anyways, right? So it can make for a great gift for a family member, et cetera. How are you so sure of doubling the investment in 6 to 9 years? Great question, Con. So a couple different reasons why we're sure. And obviously, saying the word guarantee is like saying the word bomb on an airplane. Anyone who's been in the investment industry knows that you shouldn't trust anyone who says, oh, we guarantee we're going to do this or that. But we are confident we can do it. We're buying properties, cash offers in the hottest market in the history of the United States. We bought a house for 31.1% below the price per square foot that we should have had to pay, and $200,000 below the asking price. It's now worth 40% more a year later. We also just negotiated a deal where the price was reduced by about 30%, and we're able to source that off market with seller financing, which is unique. And then with our team and operating the assets and being able to sell them based on a cap rate, but buying them based on a real estate value, those things combined while making sure that the allocations go into themed homes that are be defendable. It doesn't matter if 3 times as many properties come on the market. I don't think any are going to sleep 22 people in that area are going to have that type of theme to it. That's really important to us. And those take a long time to find. They're challenging to find, and it's challenging to negotiate an off-market deal, but we have a lot of experience doing that for our family offices the last 15 years, and a lot of experience, negotiating deals. Ryan has a question here. What's your projected IRR and multiple on invested capital? So a 2x plus the vacation credit, so 2.1 to 2.4x. And then IRR is 12% is the estimated. We think that's relatively conservative, but 12% is what we're saying between the quarterly cash flows that come out, as well as the exit at the end. When you look at that over the total holding period, we believe it's going to be a 12%. And thanks, Jen, for answering that. Patrick, we'll get you the slides, no problem. Let's see here. I think that was all the questions I saw up above. How do I transfer part of my IRA into this fund? Yes, so if you want to, you can connect with our team, and Jen, maybe you can take note of the person who just asked that question, and then we will get in touch with you, because we have a few different self-directed IRA platforms we work with very closely, and we're flexible working with different ones you might work with. We know the founder of Camaplan well. We've spoken on Quest Trust times. Equity Trust likes us, we like them. They're inviting some of their investors to our event next week, and I think they're on stage at our event, as Camaplan and Quest Trust have before. So we can help you navigate the self-directed IRA part of that as needed. How long after the 2x do you anticipate the liquidity event? Well, the 2x return will be partially done through the partial liquidity event. When we buy 10 houses, and then we sell off 1 to 4 and then refinance the remaining houses, that will be how we get you to the 2x return. And then we hope to hold these homes for a very long period of time. Our ultimate goal is to build up a portfolio of 600 homes that are an institutional quality portfolio for the very long term. And we're motivated to do that and continuing to build the balance sheet. How much fund are you looking to raise? Are you raising money deal by deal? So really good question, Z. For this deal, we have $900,000 of space in the deal. We have $450,000 of that soft committed already. So shoot a message to Jen or I directly with the amount that you're thinking of investing, and we can try to reserve that, for you for the next, 10 days or 15 days here. We do expect it to fill up in 10 to 12 days though. But importantly though, we're raising a minimum of $10 million for the fund, maximum of 15 million, but every time money comes in, we'll be allocating it into the next property. So when you invest, you're investing in our fund, which gets you access to 10 different properties. You're not only investing in Park City or only investing in the Grand Canyon. But if you wanted to put in $100,000 now, and then every time we do a deal, check in with us. And if you don't like one of our future deals or any of the future deals, you just stay at that 100,000. If you really love what we're doing and you see the excitement around the properties, then you can always put in another 25K on the next deal, another 25K a couple of deals later, and come in parts over time. Charles had a question. Are we totally reliant upon Airbnb? No, really good question. I should have brought this up earlier. One of the mistakes of people who are mom and pop Airbnb owners, which is almost everyone these days, very few Airbnb hosts have more than 3 properties, is that they only are on Airbnb and VRBO. But there are about 10 different websites where you can book out these types of properties, including booking.com, including hotels.com, including HomeAway, et cetera. And you can get the cream of the crop on those platforms by being listed on them and get a higher nightly rate by getting more exposure. So Airbnb has 71% market share, but these other ones have market share. And this is not like, if any of you are familiar with Amazon, lots of people who make a lot of money selling products on Amazon only list on Amazon. Some people go to jet.com or walmart.com. Very few go anywhere else. And it's very similar with the Airbnb space, but this is not like that. We're not selling a bag of bath salts and we can make 1,000 sales a day. Per night, you can only rent that property out to one person for that night, one party. So you want to sell it at the optimal, highest rate possible. And there's no chance to resell it 5 times. So you're not on multiple platforms because, you're going to get 10 times as many sales being on 10 platforms. You only need one wealthy family coming to Park City to rent your property for $2,900 a night to get that return. And we've had a $12,000 stay before in Park City in December before. And so those do happen, and you don't catch all of those if you're only on one platform. So that's a really good question, Z. Or I guess that was Charles, because I should have brought that up earlier, honestly. And I'm sure a few people might have missed that. Is the fund open to Canadian investors? Yes, we're open to investors internationally. You will need to be accredited and have a letter from a CPA or attorney or a wealth advisor of some type that just says, yes, this person's accredited. we need to have that on file. What's the number of minimum years required to be in the fund? So Sandra, we always tell people, if you think you're going to need this money back in less than 6 to 9 years, then just don't invest the money, because it is a investment that needs that long to double your money. The reality is, if someone goes through a horrible event of a death or a divorce or something like that, we will put in best efforts to see if we can replace your slot in the fund. But it is not a stock market thing where you can just trade in and out of it all the time. And if somebody is afraid of that or heavily afraid of that, we just encourage them not to invest, because I think this will fill up and we don't want to have someone misunderstand that or think they can get their money back with a click of the finger and it's a liquid vehicle like a mutual fund or something, because it's not. As you sell off the properties, aren't you reducing the properties we can stay in, or can we select individual properties? So Jeff, yeah, it would be reducing the number of properties that you can stay in, but we only sell those off to get you the 2x return in a very timely manner. And we will be motivated to keep the best of the best properties in the portfolio that are going to be ones that we're proud of as a company to have within our network long-term, and keep a variety, which is important. We don't want all mountain properties that are really high in the wintertime and then in the summer low rates. And we don't want all beach properties or too much concentration in one state or a county. We're going in different cities. So usually we don't have any dual assets, 2 assets in one county, just for that diversification factor. How will you make money on Airbnb nights if the nights are given away for free? So Z, when everyone's doubled their money, if you look at the usage credits and you do the math on that, between 15 and 18% of the annual nights will be vacation credit nights. So if every investor used every single vacation credit night, then we would still have enough nights to have it make sense and be on Airbnb. That's for after everyone's doubled their money. So that part of the math, is fine. It makes sense for us to do. While you're doubling your money, importantly, if you choose to stay at the properties, then that counts towards the doubling of your money at a discounted rate of that nightly rate. So there's breaks on that. If you invest more than $250,000, $500,000, or $1 million, then it's a more heavily discounted rate that counts towards the doubling of your money. But otherwise, someone who never stays at the properties, they put in $125K, you're going to get $250,000 back is the game plan through quarterly cash flows and that refinancing and sale. And if you say, oh, I want to use the properties like maximum number of nights, and I'm going to stay on New Year's Eve when it's $2,900 a night, and then you calculate in the discount based on however much you invested. Well, then, if you only invested $100,000 and you used your maximum nights every single year on the peak night rates, that does hurt the other investors more. So it needs to be accounted towards the doubling of your money, because remember, once you've doubled your money and then you're out of the deal, all the profits flow to the remaining investors. So that investor who used the peak nights, then they're going to get a 1.85 or 1.65 return, not 2x, because part of their return was usage of the nights, which is only fair to the other investors. And it makes it so then all the profits flow to less and less investors. So eventually there's just 1, 2, 3, 5, 10 investors getting all the profits, and that speeds up the doubling of their returns. Will the income be subject to state taxes as well as federal? So David, this is a question that I have to be careful in the way I answer it, because I'm not a CPA, I'm not your tax advisor. In general, any income you get from any source is taxable, right? If it is within a retirement, tax-protected retirement account, there could be exceptions to that, of course. But this is very tax efficient of an investment, because we're doing cost segregation, bonus depreciation on the property. And when we add a hot tub, furniture, decorative items in the yard, a tree house, other things like that, that's all bonus depreciated assets. And when you have a house that has low land value, you can't do bonus depreciation on land, and it's more of the house value, then you get even a higher bonus depreciation level because of the level of equipment that you get to bonus depreciate. So that's something important to know. But for the exact tax treatment, obviously you have to refer to someone who knows your exact situation. So I don't know what country you're in. I'm guessing the United States, the way that you put the question. But the first portion of the money coming back to you is a return of your money. It's not a return on your money. So that first portion coming back is not taxed as income. It's a return of your money. After that, it's a return on your money, and it's treated as income. But If we've held it for over a year, which we will, when we sell part of the portfolio, that's a long-term capital gain, which gets taxed more efficiently than income would. So I'm glad you asked that question. I think most people here probably appreciate, David, you bringing that up because that's critical to know. If we invested today, when would you get our first quarterly return? If you invested today, your quarterly return would be at the end of December. So you get it on January 15th, January 17th is when the wire transfers go out. And what's unique is that when we bought the Park City property, it was offline. We had to furnish it. There were supply chain issues last year, as you remember, just getting a couch or a bed. So it took us a good 6 weeks, 7 weeks to furnish it. We got it online, it started producing income. And even those investors got a distribution the very first quarter they invested, even though it was offline completely. With this property, it's online. It already has great reviews on Airbnb. It went online about a month and a half ago. And we are actually setting up the listing for that right now, even though we close October 20th, I believe it is. And so the listing is going live by Wednesday next week or Tuesday, Wednesday. And we're actually be taking bookings in for the day after our closing date now, so that we'll hit the ground running. And within 24 hours or 48 hours, whenever that first booking is after we close, there'll be income coming in on that property. And there's income coming in on the Park City property already. So it'll be the very first quarter. There's no big delay, which is a big benefit. A lot of real estate deals, you have to wait 9 months, 12 months. You have to do construction first. Maybe something goes wrong and the bank pulls financing. For Park City, we bought property all cash, no financing headaches. For this property, 75% cash, 25% seller financing, which was negotiated directly with the owner. And the ability to reach out to someone off market and actually get them to respond to you and acknowledge you exist and get in communication is one challenge. And then coming to an agreement and figuring out terms that are friendly to you both is the other challenge that's taken us, a decade and a half to figure out how to do in an effective way. Since platforms usually own the customer list, do you focus only on repeat customers, building out your own lists? Yeah, great question, Charles. So we bought Canyon Outpost.com. We'll be doing direct bookings. We'll also put it on multiple platforms. We'll also have 3 listings: the front outpost, the back building, as well as both buildings together, which sleeps 22 people the way the house is set up right now. And we can get phone numbers of every guest and do some text message marketing over time if we want to. Getting their email address, you have to have them register with your property management software, which Airbnb discourages, but it's not technically against the terms. It's not going to get you kicked off Airbnb, but we are building up those lists. We want to get direct bookings to avoid Airbnb fees, obviously, as much as we can. But then also just repeat customers and repeat bookings. So having that brand is really important as well. The Grand Canyon Outpost is something people can remember because it looks like a trading post. And so that will be an important part of the strategy. Our core business is very strong at marketing. That's why we, at the Family Office Club, we have 238,000 people on our email list. We have 1.9 million people following us on social media. We have the largest social media asset in a doctor dental niche, as well as the family office niche. And so one of our strengths is marketing and positioning, which is another reason why we're confident we can do very well marketing the property. See, looks like we have, Con, what are the risks with this investment? A risk is that we buy now, we buy another property late Q4, buy another property Q1, and then the market tanks, and these first 3 properties aren't worth what we bought them for, but they're still cash flowing. But then the next 7 properties we would buy would be at better prices. Maybe the worst case would be we buy all 10 properties over the next 12 to 18 months. And right after closing the 10th property, the market had been flat the whole time, and then it massively tanks. Would be probably the biggest risk. And I happen to die in a plane crash that same month. And now someone has to step in, liquidate the portfolio, and all you got was the cash flows over that time. And you had to sell the properties if that was in the best interest of the investors, whoever put in place to represent the LPs, then maybe you're only getting, 60, 70, 80% of your money back. Very, very unlikely this would go to complete zero, right? Like, let's assume there's 3 forest fires in 3 out of our 10 markets and 3 houses burned to the ground. And for some weird reason, because of how the tenant burned down the house, insurance would only cover 2 of the 3 houses. Even in that case, we're not looking at all 10 houses burning to the ground and being worth nothing, right? and you still have the land and then the insurance check to hopefully rebuild 2 or 3 of those houses. So those are some of the worst case scenarios that I could think of. But one of the reasons we created this is that I've done many investments for my own balance sheet. We're usually doing 5 to 10 investments myself each year. We've done dozens and dozens and $250 million worth of deals for our investors, $55 million in deals just this year. I've only been defrauded one time, and it was by an oil and gas group. And we had due diligence reports on them, references, met them in person. But it still scared me. It was a small amount of money, but it still scared me. And we had been putting off building out our own real estate platform. And when that happened, I said, you know what, I want to have a place for my investors' capital and my capital where no one's touching the bank account but us. I'm not referring them to third parties, and just have something that we know is solid and structured in the way that I think people should structure things, where it's super aligned for the investor, which makes it more appealing and easier to bring in the capital, but also they win first in a big way. So that's part of the reason why we created the platform, is to avoid that counterparty risk. Yeah, if a lockdown happens again, it would be amazing for us, Con, not a bad thing, because when lockdowns happen, people weren't allowed to go in the office, and they said, oh, wait a minute, if I'm sitting at home in downtown Chicago in this nasty weather, why don't I go to Costa Rica or Hawaii or Bali or Austin, Texas or South Florida, and I'm just going to work remotely, and my boss doesn't even need to know, or he can, give me a 3-month warning when I need to come back to the office. So probably the best thing possible for us would be a lockdown, honestly. The worst thing possible is the federal government and states and counties just going crazy hard on short-term rentals. If that happens, we have mitigation plans to do that we're already working on, that allow us to operate in counties where there's very strict STR laws, like Sedona, Tahoe, Oahu. We've read every word of some of those ordinances and the votes that recently went down in Sedona and stuff like that. So we're very much familiar with those risks. But I don't see the federal government coming down on a big industry like this. Or someone on social media the other day that was saying, like, oh, Airbnbs are causing this housing crisis, and trying to say bad things about Airbnbs, which they're free to do so. But someone responded and they're like, oh, wait, so you want all the money flowing to these huge corporations with all their bureaucracy and big CEOs making 50 million a year, and not to all these mom and pop business owners and these small investors? Like, that's not very American or entrepreneurial. So there's a lot of arguments for why is it that Airbnb is so popular versus hotels. It's a better experience, right? Who wants to sit in a hotel lobby with your friends to play a board game, or to hang out and have dinner when you're traveling, right? When you have kids, and taking 12 kids out with 3 families to somewhere to eat for dinner, not the best experience sometimes. So any other questions? I know we've got still a lot of people on here. If there's any questions, concerns, or anything about the properties, we're definitely excited about these factors that we're showing here on the screen. And we've learned so much in 15 years running our investor club, that this is a chance to show off what we've learned. For example, we had a client once that had us on retainer to source deals for them in the consumer market. And we came up with 370 possible assets we could buy. We reached out to all of them to engage with them. 70 of them, we got to a buyable asset. We got on the phone with 70 of those. On the 70 phone calls, we identified 8 investable assets. We brought the asset that was the best one to acquire. And this family had been paying us $4,000 a month to do this over 9 months. And they looked at it and they said, oh, well, they don't have a pitch deck, and this isn't represented by a professional investment banker, so we don't see it as a very well qualified asset, so we're turning it down. And it was an amazing deal. So we said, okay, well, we're going to invest in this company and own 33% of it if you don't want to, if you don't mind. And they said, yeah, let's go ahead, do that. And we ended up doing the investment. So running through those processes of talking to 370 people to find 8 investable and then get a deal done off market is exactly how we're adding value in a portfolio like this. Like, it just takes a lot of work, and it's just a process. And we teach this stuff at our workshops in our investor club, but actually doing it is the harder part. Will you issue K1s for each state where the properties are located? We issue K1s to the investors at the top level for the fund. On the federal level K1, you'll get a K1 at the end of the year. All right, any other questions before I wrap it up? If not, then please just shoot a text message or email us. If you do have an interest in having like a soft commitment till you look at the subscription agreement, et cetera. Obviously, it's not a binding commitment until you get to look at all of the details of the investment, but we use DocuSign to make it simple. And then a wire transfer, which is easy as well versus sending a check or something. And we've got about $450,000 of space left in the deal we're closing on right now. And we look forward to working with you. So here are the QR code to schedule a call and the contact details here. And appreciate your time here today. Hope to see many of you at our 1,000 person single family office summit next Thursday in New York City. It's in Midtown New York, Hilton Hotel. We have 50 speakers on stage, including 2 billionaires who are headline speakers. And if you're on this webinar and you happen to be at the event on Thursday, come up and say hello. And definitely appreciate your time being here today. Take care, and I hope to put your capital to work within the Investor Residences 10 Property Fund.